Hey guys, so in this week's portfolio update, we're going to talk about my worst performing stock and what I'm going to do about it. Alright guys, so this is my portfolio. It is a mix of growth stocks and dividend stocks and value stocks. It's a mix of all three, so I am not strictly adhering to one type of investing. So right now my goal is just to make money. I am participating in the Grow My Portfolio 2020 Challenge, where the goal is to get this portfolio to $25,000 by the end of the year, no matter what happens in the market. And this week, we are having a bad time. And I bet you can already see which stock we're going to talk about. But anyways, let's go over the positions. Bank of America, we are down 4.5%. Cloudera, we were up 3.59%. Cisco, Cisco, we are down 11.60%. Facebook, we are up 36.88%. Intel, we are down 3.20%. Realty, we are up 19.78%. Pfizer, up 7.74%. Qualcomm, we are up 39.48%. Marvell, we are up 23.56%. Sony, we are up 9.31%. AT&T, can't catch a break. We are down 6.46%. Tapestry, we are up 22.99%. Tesla, we are down 6.10%. And I gotta say, although I am bullish on Tesla in the long run, and this may be something I cover in a later video, I do wish I didn't buy Tesla at all-time highs, even post-stock split. But, you know, I'm in it for the long run, so this is what I have to deal with. Finally, we got Uber. We are up 22.90%. This is a stock, I keep mentioning it. I do plan on selling if it gets back up to 40, which, you know, it's going the opposite way. But anyway, that gives me a total equity of $21,563.87, and we are up 8.07%. Quite a ways down from last week. And I gotta say, this is with me adding $2,700 to the account. Okay, so let's talk about my worst performing stock, which, surprise, is Cisco. Now, I know several weeks ago I made a video where on the side I reacted to the latest Cisco earnings, and yeah, they were piss poor. They were really shitty earnings, and at the time I kind of questioned my involvement with Cisco a little bit, even though they are my favorite stock because I'm a network engineer and I specialize in Cisco products. So, and at the time I was a little mad, but let's take a look at it. So part of the reason why I'm doing so poorly at Cisco is mostly it is my fault. It is my fault. So Cisco is one of the very first stocks I bought. And this was before my Fidelity account, before all of it. I opened my Robinhood account, which is the account I opened back in May, and I bought 3 stocks without even thinking about it, without, you know, any research whatsoever, no company research, no PE ratios, no financials, nothing. I bought 3 stocks, and Cisco is one of them. And I bought it at $57.04. God damn it, dude. I mean, if I had known better, I would have elected to maybe not buy Cisco at close to all-time highs. But I did. And then I did it again. So I will say that, you know, most of it is due to the stock price kind of going to shit a little bit. But, I mean, at least half of it, a good chunk of it, I mean, the blame is on me. And I'm going to chalk that up to market tuition. So looking at a 5-year chart, I kind of got in somewhere around here or whatever. And since I made my first investments into Cisco, I mean, the stock price did go up for a while. I mean, all the way until the July the 8th. And then I believe at that point, that's when the trade war between the U.S. and China, it really started to escalate. And Trump put a bunch of tariffs on imports from China. That immediately crashed the stocks on a lot of tech giants because a lot of companies, Cisco included, they source a lot of parts from China in order to make their goods. And at that point, the stock started crashing. And it kept crashing as the trade war intensified. And I believe China retaliated eventually with a 10% tariff on imports from us. So now it became difficult for us to sell stuff to China. It became a mess. And then roughly around in December or so, some trade war optimism started to come up. And then I believe in January, we started working out a phase 1 trade deal. Now, keep in mind, the trade deal is still in effect. Imports from China, still tariffed. Stuff that we sell to China, still tariffed. So that is still taking effect right now. But anyways, we reached the phase 1 trade deal. which had some optimism, but then coronavirus hit. And we know what that did to the stocks. That cratered the stock, and along with many others. Well, all others. And then it started climbing back. And then they released piss poor earnings, which was their last earnings report. And here we are. That leads us to today. So I would like to offer the fact that, the things that have happened to Cisco are not a result of Cisco's business model. Everything that has happened to Cisco negatively, has been caused by a force outside of Cisco. So fortunately, this isn't something that we can blame on any business practices. I do applaud Cisco for doing the best they can, even though their earnings report was not very good, at least the last one. But it does give me faith in the business that, the business itself is doing things right. At least the best it can. Now, one thing we need to think about, though, and this is what I thought about after the earnings, and after I was mad. Cisco is not considered the growth stock. We are not buying Cisco for it to explode in the years to come. Cisco primarily makes network switches and routers and stuff like that, and it also sells a subscription-based products such as their AnyConnect subscription and their Umbrella subscription. I should know all this. I'm a Cisco-based engineer. That's how they make their money. But they primarily make their money through selling hardware. And through COVID times and tariff times, the overall worldwide demand for that kind of stuff, it also cratered. And that also took an effect on their stock price. All right, let's start taking a look at some actual numbers. Right now, they are trading, as of right now, at a forward PE of 13.18. So it is trading fairly cheaply. If we go over here, the industry average is 27.59. If you think Cisco's worth it, this price is probably a good time to buy. But anyways, they're trading in a forward PE of 13.18. They are a dividend-paying stock. Right now, the payout ratio is 53.79. Good rule of thumb is that anything under 75% is good. Let's take a look at their financials, and I wanted to switch from Yahoo to their 10K. They released the 10K as of the end of July, so I think this will work. And I basically did this because I wanted to show you the difference between their products and their services when I show you this. So over the years, their revenue had been going up, and even with everything that's going on, as far as the pandemic and then all the tariffs and stuff, they did drop off, on a year-over-year basis. However, that's still good. That's still not bad. If you go over here to the product, you can see they make most of the revenue through products, through selling their hardware. And they are trying to make up for the loss of product revenue through their services and subscriptions and stuff like that. And they are gaining in that regard. However, most of their revenue is going to come through their hardware for a while. So, and that is of course dependent on the overall worldwide demand on the shit that they sell. As of right now, we're on hard times. They're going to suffer, and I think they're going to suffer for a while. Another thing I want to point out is that despite their drop in revenue, their gross margin didn't take, a proportional hit. Their gross margin is still pretty good. Their gross margin actually went up from 62% last year to 64% this year. So that's looking really good. And their net income is roughly the same, despite their drop in revenue. That's pretty good. Looking at their assets from last year to this year, they increased on cash and cash equivalents. Their assets did take a bit of a hit. However, they did pay off a lot of their debt. That's really good. Both long-term debt and short-term debt. Their liabilities, went down a lot. That's really good. So that means they could pay off their long-term debt if they wanted to with all their cash and cash equivalents and have a lot left over. They could pay off all their short-term debt. What all this means is that with everything going on, they're still holding solid. They're still performing very well, despite the crappy last quarter, which makes them a very safe dividend investment. Given everything I've seen here, it is very unlikely that they are going to suspend or lower their dividend, anytime soon. So like I said, yeah, they are solid for dividends, and I don't want to leave it at that. Let's talk about the company itself and whether I think it's going to, grow to capital gains in the future. This is not a growth stock. This is a value stock, and I want to buy it because it's undervalued, so that maybe when the market corrects and it goes back to being valued or overvalued, if I decide I don't want to do dividends, maybe I can sell it in the future for a profit. So let's take a look at that. Okay, so the industry average of this industry is 27.59. So 27.59. Now let's take average estimate, the analyst estimate for the end of fiscal year 2022. And that's a mean of 23 analysts. So let's take this, multiply by 3.33. We have 91.87. That is what, according to the P/E ratio times the industry sector, that is what the price should be at the end of fiscal year 2022. So let's assume I won an 8% return year over year. So let's divide by 1.08, and that gives me 85.06. Let's do it one more time for the end of fiscal year 2020, which is where we are right now, 78.76. Now, I'm not going to leave it like that because, as we know, the highest it's ever been is $57, and so I don't feel comfortable with that number. So I'm going to take 80% of this number, $63. Don't feel comfortable about that, but that gives me something to go on. $63. So right now it's trading at $38.28. So I think right now is a great deal. And I think it's undervalued if you think that Cisco is worth it. Now the question is Cisco worth it? I think it is. I mean, Cisco has been connecting themselves very well, despite everything going on in the market. So whether Cisco bounces back depends on how well the market bounces back from all the shit that's going on right now. For example, the tariffs and shit, that's going on right now. That has not stopped. Will the tariffs go off? I like to remain optimistic and hope that there will be some kind of resolution to this shit with China sometime in the future. I mean, these tariffs are not a very capitalist move, are they? So I like to hope that something will happen to make these tariffs go away. If that happens, that should be a good boon for Cisco and the rest of the tech market. And then we got the whole pandemic shit, which also reduces demand for hardware. And let's face it, Cisco is dependent on hardware for most of its revenue. The pandemic is a little less certain, even less certain than the tariffs. I don't know if we're ever going to return to normal this year or next year or anytime after that. So if the tariff situation resolves, and if the pandemic situation resolves as some kind of normal, I think we'll be fine. Now, when that is a difficult question. If we're gonna believe in Cisco, like we're in it for a couple of years. If you're using Cisco for anything other than dividends, I like to believe that it's worth it. So I'm gonna hold out for Cisco. I'm gonna keep buying Cisco, and I know I gave that calculation earlier with under 60 or whatever, but I'm not gonna buy that high. I mean, I made my mistakes earlier. I'm going to keep buying Cisco as long as they're under 38, 40, somewhere in that range. I'm going to keep buying, but if it goes above 41, 42, I'm just going to hold. But that's my plan for Cisco. But what do you guys think? Do you think I'm right for buying more? Do you think I should just hold and wait to see what happens? Do you think I should sell, even though it's at a massive loss? I don't think I'm going to sell, but I'm interested in knowing what you guys think. But anyways, I hope you enjoyed this. Have a great day, and eat your vegetables.